Hello everybody, and thanks for joining us this week for Econemotion, brought to you by Mike Agnew of Magnelibra Capital Advisors. You can find our blog at www.econemotions.com, where we write our weekly thoughts in this newsletter in hopes that we can provide you with unique insights upon markets, trading, and risk. I'm the manager of Magnelibra Capital Advisors, an NFA-registered CTA that manages individual accounts and executes the Blue Dragon discretionary program. Blue Dragon is a long-short relative value program which trades futures and options. Feel free to visit our website at magnelibra.com and follow me on LinkedIn as well. In the next slide, we'll show you our mission. Our mission here is simple. Magnelibra doesn't want to make up the majority of your portfolio, but rather we want to be a significant portion of your alternative investment allocation. We feel that every portfolio, whether it be long-only equities, long bonds, or a combination of both, or real estate or cash, that you should have an investment in alternatives in some fashion. In this episode, we're going to cover the AG Barr testimony. We will touch upon Tesla, Apple, Google, and Merck, and of course we had the FOMC meeting today where we go over what transpired there and how it transformed the markets. Then we will go into a few tech charts that we feel should definitely be on every investor and trader's radar. First up, let's start with the Senate Judiciary Committee today, as we saw AG Barr testify about the Mueller report and all the alleged Russian interference. As expected, the Dems bashed Barr, calling him a liar and using other pressure tactics, but given the man that he is, of course he didn't waver. But it was fun theatrics nonetheless, and we can always count on Zero Hedge for pictures that sum this topic up. And yep, this popcorn popping czar pick works just for us, just as well as for Zero Hedge as it does for us as well. Or as Trump tweeted out earlier, no collusion, no obstruction. Besides, how can you have obstruction when not only was there no collusion by Trump, but the bad actions were done by the other side, the greatest con job in history of American politics. We think it's pretty bold for the president to come out and say something like this, where he says bad actions were done by the other side. There's no doubt that this is the real story behind what has unfolded and what will transpire over the coming months. We think this is just the beginning, and Barr is supposed to appear before the House tomorrow, but word is that he is not going to do it. And the Guardian actually had an article later today saying that he is not going to appear for the House testimony and waste his time listening to these congressmen grill him over things that he already knows. So we just want to point out two things here. One, who really benefited from this whole investigation? Obviously the Democrats at the midterms. And two, what do you think the sensible thing to do in terms of sitting Democrats, knowing that there was no collusion found, and now there's potential investigation into the Democratic Party in terms of spying on the Republican candidate? Wouldn't you think some of these Dems would start to distance themselves? I don't know. Just all seems surreal, but it's going to be fun to watch this all play out. It was interesting today at the testimony. You could hear the Dems say, "Hey, you used the word spying. Are you sure that that's appropriate?" And AG Barr was like, "I don't know. Is there any other?" It can't be misinterpreted, can it? Spying? It means what it means. Anyways, if you want to follow this story more closely, I have two sources here that I think you should take a look at. Sarah Carter, who is regularly on Fox News, and here's her Twitter page. And some of you more open-minded followers, Praying Medic does an excellent job of covering all of this, as well as all the Q Anon movement stuff. And we know everybody thinks that that's big on conspiracy and theory, but we got to be a little bit more open-minded than that. There's always some truth to some things, so we like to point these things out. And these kind of people, here's Praying Medic here. He does an excellent job of covering everything that from the Russian collusion to what's going on with the Q movement. So you might want to take a look at that. Moving on, Zero Hedge. They posted an article today about the U.S. government's increased interest payments now hitting some $600 billion and how this is a major cause of concern. Okay, we might agree a little bit, but we beg to differ, as we live in a financial construct governed by debt, whereby money is debt, and we covered this last week on our blog as well. And if debt is money, well, then why are we afraid of it rising? Could GDP grow without increased money or increased debt? No. So we're not in the camp of worriedness. What we should be worrying everyone is the fact that we continue to pay for such terrible prognostications, such as in this article, as they point out that the OMB is projecting a budget surplus by 2024. Can you imagine a budget surplus? I mean, we've got $600 billion in debt and interest on the debt alone. With all this debt and interest, they're saying surplus. What planet do these guys live on? I don't know, but they make a ton of money, I guess. PhD economist, but their prognostication skills are terrible. We can almost guarantee that there's not going to be a budget surplus anytime soon. Anyways, don't be alarmed. We have and live with a fiat system by which we rely upon a private party to fund our government. So what Minsky was implying, not accurately depicted in his cycle as shown here. See this Minsky moment, everyone talks about this. Hedge finance, speculative, then Ponzi, then the Minsky moment where everything collapses, right? That's typical. However, being that the United States is the reserve currency of the world and knowing full well that scarcity of actual dollars is abundant, you better bet your bottom dollar that we are far from implosion, far from hyperinflation, and rather we believe the U.S. is in a very strong position for now, but that all could change. But you know, we always hear the cleanest, dirtiest shirt, but in reality, there's a massive shortage of U.S. dollars out there. And when you have this much debt, you know what? We've said it before, you can't pay it back in won, yen, or euros. So, we all know what's happening here, don't we? As far as financial reserve currency protection, the U.S. government has it, but we can't say that for some of the corporations out there, in particular Tesla, which should be the poster child for unicorns. Yeah, we often pick on Tesla, but you know what? He deserves it. You know, he says what he wants, has no repercussions. Even the SEC kind of bows down to him, which we really can't believe. But I don't know. I guess they did fine him $20 million or something, but who knows? He's probably not even paying for that. Anyways, as WolfStreet.com pointed out, Tesla's recent SEC 10Q disclosed just how much or how many pollution credits aided their net loss. Meaning, if it weren't for the $200 million in ZEV regulatory credits, Tesla would have lost a whopping $917 million. We can see the chart here, and here's their current loss. Tesla, with their $917 million loss, this would have been 200 more than actually reported, with actual operating cash flow a negative $1.1 billion. But I don't know. What do we know? Oh wait, what? Fidelity? They're starting to sell some of their holdings. Look at this, guys. So Tesla, some of their Fidelity funds, you can see they've been liquidating. They began here 5.41 million shares, ending barely 260,000. Beginning at 2.1 million, now 0. So it's not just a retail here, which is most likely probably still long and buying, but the big guys are starting to sell out, liquidating millions of shares at a time, and the insiders are probably selling as well. So we don't know. Tesla, we haven't liked it. It's gotten a big bounce generally off of every time it's dipped to this $250 mark, as we can show here by our chart. You can see our nice trend channel that we've got here. It does dip there, and we have seen buyers come in every time it's done it, and it's popped. You know, we had that old, oh, Saudi Arabia might be looking at them, and they run it all the way up here, and then now we've fallen back down, but we're below here now. So this does concern us a little bit, as the longs that are probably bought again here, they're starting to get tested. So will Elon be able to pull some unicorn strings again? I don't think so here. I think too much is happening, and the overall market setup here is a little overdone. So we're very interested to see the reaction underneath 250 here, and if we get a push down below 200, which would probably be the next obvious support, we feel that probably got to stay away from this one here just to be safe. Apple also had earnings out, which was pretty interesting considering the stock rallied as much as it did. Their blockbuster guidance despite tumbling iPhone sales, China revenues. Who cares about declining revenues, right? No trend in this chart as far as we see. What really has investors stoked, and this is the chart here, no trend, right? Look at these percentage change year over year revenues. This doesn't look good. But people still love it, and you know, they've got a great brand following, so people will buy it. But what we really feel is their 70-cent dividend was a big reason for their jump, a 4-cent increase. But what really drove it was this, the 75 billion stock buyback. As we talked about in our prior video and our prior blog posts, this is what's really supported the equity market, is the corporations themselves buying back their stock, decreasing their shares outstanding. even though earnings suck, it's just a ratio. So, and it looks good. And everyone will say Apple's got a ton of cash. Why not? Yeah, they do have a ton of cash, but it is declining. It's down 30% from its highs. On top of it, they've got 25 billion in debt as well, and they've got massive costs. Their R&D, is up there. It's if you don't have a blockbuster product and you keep declining cash this way, I think the investors are going to get a little bit nervous. So we're seeing this across the board here so far. With Google had some terrible earnings. Apple did beat expectations, but we can see that the proof is in the pudding here in these declining metrics. So we're kind of backing away here from the tech, and they've been the outperformer here the last few months. So it'll be interesting to see how this all transpires. Moving away from the tech, we have Merck. Earnings were boosted by Keytruda, which is I always think that's the one I'm sitting up late at night, and I can just like the side effects are like longer than the commercial, but that could be just us because we're just half asleep. But we thought this was interesting. Surging sales of vaccines in addition to their Keytruda. Now, it's higher vaccine sales, in particular their Gardasil, which prevents a cancer-causing sexually transmitted virus. And sales of these childhood vaccines, including one that prevents the measles, jumped 27%, up to 496 million. We don't want to be conspiracy theorists here, but Merck is the only U.S. supplier of measles, mumps, rubella vaccine, and has increased its production. And this is like the worst outbreaks in like 2 decades. We've been seeing recently in the news. So I don't know. We hope you get the picture. And if you think we're off our rock ground what we're talking about, Statista always does great charts here, and you can see. I mean, Gardasil's right here. Prevnar from Pfizer is up above them here, and it's like, what are we doing here, guys? In terms of are these things coming back? Is there a reason why they're coming back? Why aren't they eradicated? Are the vaccines themselves causing these things? We don't really know, but there's some big money in this stuff, and we have to be cognizant of what we're putting into our bodies, and exactly I saw. There was something about the Brady Bunch and Marcia. She came out because some memes were using it as saying like, oh, she's got the family's got the measles, so I'm just gonna get the measles. And I guess they had to contact Marcia Brady. I don't know her real name. I don't have the article up here, and she was like disavowing like that news, like no, it's dangerous. The measles. I don't know what we were doing back in the 70s, but there's some big money involved in this stuff, so we got to be cognizant of these things and just keep it on our radar. Okay, moving along, let's get to Powell. He says Fed doesn't see strong case for rate cut or hike. Wow, that's playing both sides, isn't it? So a little something for everyone to chew on. However, the AI bots and their NLPs were a bit slow to react to the monetary policy implementation notice. If you don't know what NLPs are, it's natural language processing. Everyone knows we have AI bots that read all the headlines and they run the markets, whichever way they feel that was pre-programmed to do based upon the language that they're processing. But anyways, the decisions regarding the monetary policy implementation came out after, and they said, I'll just read here, the Board of Governors of the Federal Reserve System voted unanimously that interest rates paid on required and excess reserve balances at 2.35%, which is a reduction of 15 basis points below top of the range. We talked earlier last week about somebody is paying the excess rate. Effective Fed funds rate is trading above the IOER, which it shouldn't, but it has, and that led us to believe that there's a little bit of a dollar shortage, a little bit of liquidity crunch, and the Fed would have to do something about that. They don't like not having control, and this is what they do. They're lowering the rate. So the bond market has kind of forced their hand here, which we're good to see. Anyway, we saw a massive whipsaw on everything as equities, bonds, and yield curves all rose and popped, then found themselves under attack after all this news came out that they lowered 15 basis points, this IOER. So here we can see in our next chart, the 10-year was coming down near the 2.45% level, and then you can just see everything as all the bots digested the information, like, wait, what happened? And then the yield curve completely turned around. I think the 5-year versus the 30-year, or the FOB, it was started out at -2, then went up to about +4, and 4 basis points, and then drop back down 6 curve wise. So it total whipsaw, and we'll see where we go from there. Here we can see that the 10-year yield likes to, it's been sitting around this 2.5% area, which is the top end of the Fed funds, actually. And we've been talking about that level for quite some time. So, we're going to be on hold here for a little bit. I think the Fed ultimately is going to have to bail on its rate hiking. And they did talk about how the end of the balance sheet reduction is cut off in September. So we're just, May, June, July, August, the next 4 months, we're going to see very little runoff, and then everyone knows that they're stopping. So we believe the bond market, ceiling is somewhere in here. They're not going to be able to push it any higher than this. And especially if the equity markets start to turn around a little bit, we can expect them to drop off here. You'll get the bond market to front run that and lead the way. Moving along here, let's look at Google. As we said, their earnings weren't so hot. They did drop right away, down 6%, and then continuing to lose 3% more the next day, down 9.39% so far off the highs. So, Google was setting this up for today's move, actually, and, the rest of the fangs couldn't hold it up. So when we look at the technical setup of the fangs, which is we always love to follow these stocks because this is what everyone's in. Why follow anything else? It's what everyone's in. Let's just keep an eye on it. So we've got this nice little trend channel that's been going on since the beginning of this year, and Google's brought it down here to the bottom. Now, whether or not that this holds again, we're not so sure. We're you can see our 200 period VWAP up here is we're well below it now, and it's much higher than it was back here. So we'll probably get some back and fill, but generally we think the technical setup for the tech stocks to continue outperformance of the S&P 500 is probably done. We're not really stepping out here too much, but we can bottom pick here and say, if we start to get below here, then the things are really in trouble against the broader market. So we'll see. We'll keep a quick eye on that. And speaking of the NASDAQ, you can see that the buyers buying into new highs all year, ever since that turnaround from the PBOC, printing $1 trillion in one overnight session. You can see the big bounce here to sit, the stick save here, but we got up back to this high at 76.97, which was 7,700, and we got above there. Sorry, 7,700. Came up to the highs up here at somewhere around 78.40ish, and we backed off. And our big line in the sand here remains 76.97. So we'll be interested to see. We're probably going to test this level to see how these, all these top buyers here, whether or not they can, stay the course, or is this just the beginning of a larger move down? So we'll see. In terms of the S&P 500, we can see there's been a clear rejection against the highs, double top, triple top even here at 29.60. Big red, encompassing bar here on the candlesticks. So we'll see. This is an interesting setup. We'll need to see some follow through in the coming days, and we would suspect that catching a falling knife dip buyers here to be left some bloody hands. So we're not too positive here on this move, but we'd like to see the setup tomorrow to see if we get some confirmation here. And finally, technically, we leave you with a little bit of a head and shoulders formation in gold. Now, people aren't talking about this. Gold's had a good run up, but it's had a big back off here from the 1350 level. And to us, this looks like a head and shoulders, and this 1288 level is really big here. We'd like to see it. We don't want to say that the bulls don't have control still, but they've definitely lost it, and the bears will maintain. They're still, they're maintaining pressure first before this and below this 1288 level, as well as this 1304 VWAP. So we don't like gold here, and despite everyone saying, "Oh, the Fed's gonna have to cut," that's dollar bearish now. This is bigger than that. It's if they do cut, obviously everyone knows what's going to happen. Everyone's going to say it's risk on, game on. Why are we going to buy this relic, as some of the central bankers like to call it? They're going to be on the risk assets. So we're not so sure here that the bears don't have the control to push it lower, which we think kind of we're leaning that way if they don't get above this 1288 sometime soon. And then finally, I don't know if everybody's been keeping track of what's been going on in Venezuela, but The Economist is reporting on the ongoing what is seemingly a proxy war again with Russia, China, and the U.S. as pro-Maduro forces backed by Russia and China clash with the Western-backed Juan Guaido. So, the real casualty here, guys, is the people. I mean, this is an atrocity, and we hope and pray for a peaceful resolution. As the people are always ones to suffer here. And this is just turning into a humanitarian nightmare, and we don't like to see that at any point in time in any country. And of course, Western media is basically on blackout, much like they did with the Yellow Vest movement out in France. But we hope you stay informed of this situation, and geopolitically, this could be a little bit of a powder keg here, depending on how the U.S. responds to any Russian-Chinese backing of Maduro. So it's going to be interesting to see. So let's keep that up on our radar. Okay, that's it. This is Mike Agnew signing off with our favorite Kenny Power GIF. We're out.